you ever thought about starting your own business? It could be work you do on the side while you keep your full-time job, or you could become a full-time entrepreneur. This video will review 5 tips for going from employee to self-employed. Hi, I'm Laura Adams, an award-winning personal finance author and Money Girl podcast host with over 43 million downloads. For over a decade, I've helped millions of readers and listeners understand how to manage money and build wealth. Our goal is to offer tips and advice you can put into action for more financial security and success. Becoming self-employed can be very exciting and financially rewarding. Whether you call yourself a freelancer, independent contractor, or sole proprietor, you're becoming a small business owner. And you're going to need to wear many different hats. So tip number 1 is to get help from a professional. All of a sudden, you're going to be sales, operations, legal, and the financial departments all wrapped up in one person. Find an accountant or tax pro who listens well and seems to understand the kind of work you do. A good accountant can save you money by making sure you plan accordingly for taxes and deduct as many legitimate business expenses as possible. Tip number 2 is to be prepared for self-employment taxes. When you start working for yourself, one of the most important tips is to get familiar with taxes you owe. For instance, the self-employment tax, that's how you pay into the Social Security and Medicare systems. Unfortunately, it can take many new entrepreneurs by surprise. Here's why. When you're an employee, you only pay half your Social Security and Medicare taxes. Your employer pays the other half for you. When you become your own boss, you must pay 100% of those taxes on your business income. For 2024, the self-employment tax rate is 15.3% of net earnings. That's a total of 12.4% for Social Security and 2.9% for Medicare. The first $168,600 of earnings is subject to the Social Security portion, but there's no income cap on the Medicare portion. Plus, you may also pay an additional 0.9% for Medicare if your net self-employment earnings exceed an annual limit. You file self-employment taxes annually on a form called Schedule SE and include it with your Form 1040. Remember that if you don't report all your self-employment income, your future Social Security benefits will be reduced. Tip 3 is to be prepared for income taxes. In addition to self-employment tax, you must also pay federal and any state income taxes, since an employer isn't withholding and paying them for you. You generally must pay estimated taxes 4 times a year, even if you're just working part-time at your business. That helps you stay on track with tax payments. Otherwise, you could find yourself with a big tax bill at the end of the year. An accountant can help you calculate the amount you should pay in estimated quarterly taxes. Tip 4 is to claim legitimate business tax deductions. Even though you must pay more taxes when you're self-employed, you have the benefit of deducting qualified business expenses from your taxable income, and that reduces the tax you owe. Deductions include common and necessary costs of running your business, like office supplies, computer software, insurance, and travel. Using a dedicated business bank account helps you separate your personal and business funds and makes filing taxes a lot easier. To learn more about business banking and software integration, visit finder.com. Thanks for watching. If you like this video, please subscribe. You'll get notified when there are more helpful product reviews, money tips, and advice.